Hi and welcome to StockInvest.us podcast, Trading Tips with Jim. We are in week 4 and I believe it will be a very special week where Tesla will have quarter results after trading on Wednesday, and it's going to be a very volatile week for Tesla. Tons of other quarter results will come as well, and I think based on the signals, based on other things that I see for the market this week, that we are heading for a red week. Still, many good trades can be done, and at the end of the podcast you will hear that the Meta is so far up 20%, Occidental is so far up 11%, and you will have the trading tips for the week. So make sure to stay tuned. After a short jingle, you will get into the market section, and by the end of the podcast, as I said, you will have the trading tips. We are in week 4, getting to the end of January, and the big question now is, will I be correct? Or will there be some major falls ahead that will signal the end of the bear market? I'll try to answer these questions, of course, like I do every week. Last week I told you I thought it would be a red week, especially New York Stock Exchange. But also for Nasdaq. Numbers are in. Nasdaq started very bad last week, but a strong final on Friday where Nasdaq was heavily up, made for a positive end on the week for Nasdaq, up 0.55%, especially driven by Tesla. And just go a few podcasts back and you had the Tesla tip there among many others. And of course, many think that the bear market is over because stocks like Meta, which we also bought some time back, is now up more than 40% since it found the bottom at $96. I think it was even traded down at 89, but we bought it when it was 96. Currently trading just below $140. Many people think that we are already in a bull market, but the charts are very clear. We are still in a bear market until it is significantly broken. It will remain a bear market. Things are signing up for a possible bull market. They have been so for many weeks. As I told you, Nasdaq is able to stay above 10,300. 10,300, been bouncing down there a few times, bouncing up every time after, which is a good indication, because if it breaks below, then you will have that final fall to 8,000, which has been my bet for quite some time now. Anyway, Dow Jones didn't have a so good week, was down 2.7%. Dow Jones almost 1,000 points, down to 33,375 points. And it was in the cards because the market was heavily overbought last week. And small spoiler alert, it still remains, in my opinion, heavily overbought. We will get back to that when we get to the signals. For the week ahead of us, a lot of things are waiting, but the most important things are the quarter results. And as I told you, the quarter results, which was very strong last year, they will now start to weaken very rapidly, simply because many companies have not been able to push the inflation over on the customer. They had a huge increase in their production cost, have not been able to do the same thing with the revenues, causing them to lose profit. So as the week will progress, we will have tons of big companies starting to deliver quarter results, and market expect many of them to be bad. The question is how bad, because if they're worse than the market expect, then it will pull the market down. And that is exactly what I think will happen. We are in a little bit of euphoria now. It's been somewhat okay, especially in the tech sector after Christmas. So everyone thinks, oh, okay, we are on a big roll. But I think this can be proven wrong very shortly. Quarter results drifting in with a lot of negative results. We know that the inflation is somewhat under control so far. On the other hand, dollar is weakening very fast. And a few other things are also boiling down the pipeline. As usual, I'll let the chart determine what I think will happen this week, but I'm just laying out the groundwork for the months waiting. Hopefully, what will happen is that we will continue this upturn, we will continue to build the support below today's level, and slightly then confirm a bull market. The big thing is very often that if you wait for a confirmation, you lose out of many percentages. Many stocks, as I mentioned, the Meta, for instance, is quite heavily up since the bottom. Netflix even more so. It's been doubling since the bottom. And you can look at many stocks and they are up. If you wait for a confirmation, it will be a loss of the initial gain, which usually is strong, because when stocks turn, the first gain is usually strong before they get into a more classic pattern where it's up a few days, down a few days, up a few days, down a few days, and in the end it's more up than down. In the initial rally, it's very often quite heavy up, could be 20, 30, 40%, depending how much beating the stock have had previously. And you can lose out on some of these gains, but every week I give you the trading tips and I try to explain you where to be, how to reduce your risk a little bit. At the same time, have some type of exposure in the possible turns. We've been picking Tesla, we've been picking Meta, we've been picking them one after the other, gaining in, but also getting out, because we have not been sure yet. Last trade we did in Meta, I think it was week 51. I will get back to that at the end of the podcast in the trading tips section, but we did the last tip in the last trade in Meta. I've been in and out of Meta a few times, but the very last trade is still on and is up 20% as we speak, and will put a very nice profit in the box the day it's sold, because only when things are sold it is a profit. Until then, it's just on the paper. Anyway, losing out of that initial first part of the market upturn is a choice. It depends very much on your risk level. I like to put it this way. Going into stocks, for instance, is less risky than trying to run options, etc. in the early stages of a market turn. So you can reduce your losses a little bit, not choosing the most volatile equities and items, and of course the stocks that you select. Personally, I kept a very low profile. I've been reducing my exposure, and as we've been in the bear market, I've been between 30-40% of my cash in the market that has been in the bank waiting. I'm still not ready to go full in. I will explain more in the trading session, but I still think the chance for more downturn is higher than a possible upturn. So how do I manage the risk to get into these stocks who will bounce? Because I cannot tell for sure if the market has bottom. I cannot tell for sure that it will be 8,000. It's just guessing. And you might be a new listener and have not heard all the things I said before. But if you're able to somehow make a judgment about how you see the market move this week, next few months, maybe even the year, will enable you to make better decisions and for sure evaluate this decision. I told you gold will go up because there was a lot of reasons for gold to go up, and gold shares been doing very well. We've done the same thing with oil, etc. It's about trying to find the major trends. You will lose out on some trades, you will lose out of some profits, but in general it will be. And one of the big things that will come is electrical vehicles. These stocks, NIO, Tesla, all of them will be in for a very hefty rebound. The question is just exactly when is the bottom? Has the bottom been found? I've been in and out of electrical vehicle the last few weeks. playing on this volatility, possible bottom. But when will it finally turn? I think that moment is soon. And if I'm correct that the markets will have a huge fall, I will be starting to hamster electrical vehicles. So that's just one of the tips, and the reason why I think that will be such a good place to be is simply because when we finally get to the end of the negative market, the general economy will be bad. The recession will be a fact in many countries. The unemployment rate will increase. And in this situation, the only thing that the governments can do is reduce the interest rates and give incentives, different things, subsidize different things. And in that scenario, I think electric vehicle will be the right place to be, because they will try to initiate more growth in the economy by giving subsidies to buying electric vehicles or different other things, because green is here to stay and electric vehicles are here to stay. So close that argument, as I say, I think that the market will go down. But it will turn long before the economy. And just to repeat, quick repeat here, I think that we are finished with the bear market before 1st of June. My personal opinion is that it will be sometime in May will signal that very end of the bear market, and from that point we will go on to a bull market. Much easier trading in the bull market. We made tons of profit in the bear market simply because we've been a little restricted. And we've been more or less correct about the major trends. Question is, will I be correct about this EV thing? I don't know, but if I'm correct, markets will fall. I will start to get into the EVs, even expecting to follow further down, sitting with a loss for some time before we get into the place where things really fire up. Anyway, way too long, small intro here. Let's continue. Oil, like we follow every week, was up $1, and I think oil will just continue upwards. Currently trading at $81. Low oil price is good in general for the market, has to do something with the economy, etc. Of course, high oil price is good for oil shares, but in general, we want oil price to remain low. But I think oil will have a rally. Gold going up another $11 last week to 1,928, and I still remain extremely bullish on gold. Think gold will go all the way up to 2,500, could even be a little bit higher, and I think it's just about to fire up any time soon. Happy to read that many seems to agree with me that there is money to be made in gold. Has a little bit to do with so many things, like how the BRICS countries are moving away from the dollar, how the deficit in the United States now reached the roof. There are many indicators about gold. So let's say that you do not want to buy gold either physically or by options or otherwise. There is still gold producing companies that you can buy in the stock market, because if oil keep low and gold keep continuing, these companies, as I said, will have nice profit, and people will start betting on them if they see gold start to move even faster. So far, gold been a very good investment. I think it will remain so. It remains very strong on gold, even considering to increase my exposure there. 10-year treasury yield down to 348, down 0.03 last week, or just about 1% down. Remains high and will remain high for some time. We will soon go to the chart, but just to round up a little bit. As I said, there is a lot of quarter results coming this week, and you have to check your stock. If I didn't say, it will be Tesla aftermarket on Wednesday. Thursday, I think it's Visa. It will be Johnson & Johnson Tuesday or something, and there will just be a lot of big companies. If you are in any of the companies that have earnings releases this week, you can be in for either a positive or a negative shock. Make sure to check if your stock will have an earnings release, so you're not caught by surprise. Especially if you are playing options or you are playing gearing with lending money, because you do not want that thing to take you by a surprise. So be a little bit aware, check your stocks, where are they, when are the quarter results. Good thing. If you go to StockInvest.us, you can type in your ticker and you can even see how the stock usually reacted before the quarter results and after the quarter results, because some of them follow a very common pattern. Lots and lots of fundamental things going to hit the week, and that will for sure determine how the market goes. Now, if we look at the other side and we purely look at technical things and try to predict something looking at charts and numbers, so what are the numbers saying? The number says the following. Right now there is 43% buy signals across all the stocks that we analyze around the world. It is way too high. Last time it was this high, it was a brutal ending afterwards. But again, here comes the thing. When things are this high, you can get into a minor rally. It is like overbought and oversold. When things are overbought, they can go even faster up. There is nothing saying that it cannot happen this time. We can get into a rally that could last 1 week, 2 weeks. I do not know. All I know is that the numbers are so high that there has to be a reaction down. If it gets into a rally, things really move fast up. You have the correction. Well, the correction may be less than the gain in the period. These things you do not know. Usually you check the trends of the stock, you see where possible support levels are, etc., and try to calculate the risk this way. But in general, 43% buy signals is way too high. Going to Nasdaq is at 45. It was 46. Scream to me about the reaction down. And going to New York Stock Exchange, remaining at 54. 54 last week, 54 this week. It is way too high. Last week I told you at New York Stock Exchange it will be pain for some stocks, and some stocks are really had pain, and I think that is about to continue this week. London 39, a little bit down from last week. It was 43% last week, 39 now. Tokyo 34 and China 55. Looking at these numbers just tells me that from a technical point of view, before even looking at the chart, the signals indicate that we are way too optimistic. There will be profit securing, there will be a possible downturn. Maybe it will collide with all these quarter results. As I say, we have a huge momentum in quarter results coming in, and if they bang in very red, it may scare the market for a huge fall. So far, before even looking at the chart, I remain a little negative about the forthcoming week and the weeks ahead of us. Now, again, so how do we use this information? One of the ways I use this information is that I do not overexposure. I rather be wrong having the market go up than being too optimistic, too many stocks, losing too much. Because if market starts to fall and they start to fall fast, you've probably been there many times yourself. Your stock may lose 2, 3, 4, 5, 6, 7% very easily. You may burn a lot of profit in just a single day or two. I try to avoid these cases, so I'd rather be a little wrong. Because as I said, I still believe we are in a bear market until it's a confirmed bull market. Because when it's a bull market, I will be more optimistic and taking a little bit a higher risk. Now, I will have a very quick look at the chart, and then we will go to the trading tips and see what we can do today, if there is any stocks. Of course, I already have a check what to do, but I will not reveal that yet. Now, if you're listening to this on Spotify, and I know a lot of you are listening on audio media, and I'm so happy and grateful for all the nice reviews I get. Really appreciate it, and I hope that you are able to gain something out of this podcast, either reducing your losses or increasing your gains. or hopefully both of them. Because that's the point of this podcast, try to help you reduce your losses, increase your gains, and we've done so by using stop loss. We've done so by trying to look at the different trends and being in the right trends at the right time. Now, if you are at Spotify and you cannot see the chart, so I'll try to visualize it for you. Nasdaq is in a slight downwards trend. It's been bouncing up several times from around 10,002, 10,300, but it is slightly down still. The price is now at the upper end of the trend, and usually then expect a reaction down. That is how trends work. You get from the bottom to the trend. Now, to determine if it will be able to break through or if it will continue down, one way is to look at the relative strength index, the RSI line, and it shows that the market topped at 70. I mentioned this last week. Last time it topped like this, it was back in early December, 1st or 2nd or something around there. It was 11,408 for Nasdaq, and it fell all the way to 10,159 or 69, somewhere around. So last time it had this high relative strength index, it had a huge reaction down afterwards, also being in the top of the trend. Now we're getting close to the top of the trend, still can move up a little bit more. Top will be around 11,300, it's currently 11,100 something, so we still can move up, let's say 150 points or something before hitting the top of the trend. But that very, very high relative strength index indicate a high chance of a reaction back. The good thing is that there is a lots and lots of support below, meaning that we can have somewhat slow downturn. Doesn't have to be insane brutal like 3, 4, 5% every single day. Doesn't mean that. It means that there is a fair chance that we can have a slow downturn where the market can pick up anytime soon. So again, we're just talking a normal reaction. Buy signals from the short-term moving average and the long-term moving average, and even the relation between these two averages. That advocates for a possible upturn even today, I would say, but as we get to the top of the trend, it's a fair chance for the market to correct down. If this is to be a bull market, a shift to a bull market, what we want to see is that Nasdaq continues a little bit up, fall down, but remains above the middle of the trend, which is around 10,700-800. Stay above this and continue the next upturn from that point. That will be a very, very strong signal for a future change from bear to bull market. The chances that we are really turning the ship is still very solid, but we will let the trend be the advisor this time. We are in a slightly falling trend until it's broken. It's indicating that we are very soon to have a correction down. Now, long way getting to a slight conclusion, but the conclusion for this week will be that I believe we will have a fall in the markets, especially S&P and Dow Jones will have a fall. Could be some tech stocks at Nasdaq doing better, or could even be a slight chance that Nasdaq will be able to hold today's price, even increase a little bit. But in general, I think there is red markets ahead of us, and they will determine if we now are to head into some very red weeks ahead of us. So it'll be some sort of acid test this week. Potential good upside, potential bad downside. That makes for a risk, because as I told, when things are very high like this, you can have these mini rallies, and you can have very strong gains in single stocks. Risk reward is, in my opinion, 60-40 for further down. So it is not the best upside in my opinion, but it still is there. For the week as such, I think Nasdaq will correct down to, I will be as bearish and say that I think Nasdaq will correct all the way down to 10,600. So I'm betting for a very red week here. Again, I hope I will be wrong. I hope it will be a good week, but my years of doing this tells me that we are heading for a correction down, and it will determine a lot of the things that will happen in February. We will now head for the trading tips and see what stocks will we play this week and how did it go last week. After a lengthy market section, we are finally in the trading sections. But as I told you, and I keep telling you, everything I say in the market section lead up to the decisions for the trading tips. I can teach you so many things about trading. We could do candlesticks, I could tell you about Doji Star, we could do long legs, short legs. We could trade on the accumulated volume, flipping in and out of stocks based on their tick sizes and all of these things. That is more for the advanced trader, and this podcast was never for the advanced trader. It is for those of you who can benefit from learning some of the basics and along this journey get some trading tips as well. That's why we have the trading portfolio, so you can actually see how I trade and you can judge for yourself. Saying is easy, doing is a lot harder. But that very best advice is try to stay up with information, try to understand how things are moving, because then you are not caught by surprise. All of you should have, unless you just started trading recently, experienced periods of growth where you've been checking your account one day green, the other day green, the third day green. You go 3 weeks ahead and you look at your portfolio, you are so amazed it's up 25%, maybe even more if you really lucky, just to hit that red wave and either sitting with minimal profit or minimal losses. So you go from that very euphoric stage where you're so happy, everything, you even start to dream about all the things that you can buy, all the things that you can do, how you will do even better, just to see profit blown away in just a few short days or weeks. Much has to do with greed and fear. You will apply by the common human rules. You will be too greedy, not sell early enough, and all these things. We will not mess around with these things in the trading sections, but I'm trying to give you that general idea. Now, if you do understand the major trends, it will allow you to balance your risk level a little bit more and not be so much caught by surprises. Because as I told you, there will be quarter season, tons of results are coming out this week, and a good profit can be blown away by a bad quarter report in just a minute. So make sure to check where your stock is in terms of the quarter releases. Now back to the thing, to the trading and the ching, the money that we make and the money that we lose. Now we'll go back all the way to week 34, because in week 34 we bought Zomedica, and no, maybe you're a new listener, let's give you 30 seconds of this. So every week I pick some stocks stay in the portfolio until they are either sold from stop loss or there is another reason to get out of the portfolio. Been doing this for more than a year, and if you go to the first podcast of this year, 2023, you will hear a summary of all of them. We do so good. We hammer in on green. But in week 34, I told you I will go into Zomedica because we've done Zomedica many times at huge profit. And I thought at 26.5 cents, Zomedica was yet another buy time. Got into Zomedica in week 34. So we're talking 16 weeks before Christmas, 4 months before Christmas, just to see Zomedica suffer along all the other stocks. Zomedica is a pet caring company making medical equipment, monitoring systems, etc. for animals. When we traded Zomedica last time, they went from very few cents up to almost $3. We were enjoying these rides. We did 70 and even over 100% in some trades very, very long time back. And following Zomedica a few times. When stock got very high, they used the chance to get money, so they diluted the shares quite heavily, got 2 million in their bank, and been using these as they still are not a profitable company, but they have a lot of money in the bank. That was the argument in week 34. We buy these penny shit stocks because they have money in the bank. So it's not like they may go bankrupt tomorrow. They are in the right sector, the pet sector, the food sector. There is also the sector that is less inflation, caught by inflation. So it's somewhat inflation resistance. Now we were waiting and waiting. Zomedica was down all the way to 18-19. During this time, I told you that I believe Zomedica is still a huge buy, because when it turns, it will turn very, very fast upwards. And as I said, this is the only stock that we will buy without stop loss. Now, last week and the week before, Zomedica finally started to move. So now, from being in a huge loss, we are now in 5.28% profit. Zomedica still stays in the portfolio because I think it will brew for a rally. I have that strong feeling it will go for at least $1. And I want to be in. It's just a small gamble we have on the side. Penny gamble. And that is about the risk, as I told you. You don't know when these stocks turn. So we have that. Zomedica still stays in the portfolio, but this time in green, up 5.25 after a strong week last week. Then there is Meta, which we bought in week 51 at 115. We've been in and out of Meta several times. First time 96. We bought at 96. I don't know how many percent we've done on Meta yet, but we've been in and out. Week 45 we bought 94, sold at 112. So we've been in and out of Meta several times. Last time was week 51, we got in again. And you may ask, why did you sell Meta? Well, the Meta trade was always cut by stop loss. So I have trailing stop loss following the stock up, never down. And I had 5%, I believe it was, for Meta. So the stock just went up, found the top, then it started to fall, and it fell more than 5%, and it was just auto sold. You never know. Could have been different. Now we can look back and say that if I kept the stock at 94, I would still do good. But I did 19% that time. So far we are up 20% on the trade from week 51, because now it's 139.37. So I only lost a few percent. And these were the percentage that was cut by when it fell down for the stop loss. So with very little risk, and during that, with the Meta money we sold in week 45, we bought XPEV $7.3, sold at 12.1%, up 65%. So another reason why not sticking too long in the stock. It was sold by stop loss. So it continues. But Zomedica is 5%, almost 6% up. Meta is up 20.89% as we speak, still not being sold. It's still in my portfolio. Was very close last week. I thought it would be sold last week, but it managed to stay in, and it will stay in until cut by stop loss, because I am no wizard. I do really not know if market will go up or down. I can only give a guesstimation, but no one really knows, and Meta may continue to 150. The target, the target was $140, $150. So we are already where I think that we have taken out the short-term potential on Meta. Anyway, stays in the portfolio. Then we had Fate, and I have to use a few minutes here as well, because we bought Fate in week 1, 10.05. Then on the Friday, same week, came out a contract breach with Johnson & Johnson, I think it was, causing a major fall in Fate, falling 60%. before opening, and that made for the stop loss not to function because it's opened way lower than the stop loss. So we've been on a rescue mission for Fate ever since, currently holding the biggest loss ever in this trading tips portfolio at 45.57%. I didn't know about that contract thing. Maybe I could have if I really read up about the company, but when we bought it, it was in for an upturn. It started very good on the Monday and the Tuesday, and then came that bad news. Ever since week one, we've been into a rescue mission in Fate. I think it will continue upward a little bit more, so I stay in Fate as is. Then same week we bought Occidental, $60, currently trading almost at 67, up almost 11% for Occidental. Also not being sold in the portfolio, so right now the trading tips portfolio have Zomedica, Meta, Fate and Oxy have stayed the same. Week 41 we also bought Mullen at 30 cents, sold at 43 cents, giving 43% profit. But we have 4 stocks. You heard me say I think it will be a negative week. There will not be an additional stock in the trading tip portfolio this week. We will stay in the stocks we are. And if some is sold, I will not reinvest it. We will evaluate next week when we get there if we are to increase. But in general, I am looking to reduce my exposure. We are in 4 stocks now. Usually I would like to be sitting in 2-3 as I evaluate the market now. Max 2 actually I think is the good place to be. That is the trading tip portfolio. You may wonder, so what, is there no stock that you can advise me? I think Zomedica at current level is a good buy. I think if you want high risk, I think Mullen at current prices is in for an upturn. It's currently trading around some 0.30 I think. So week 1 we bought at 30, sold at 43. Actually it was cut by stop loss after being up almost to 50, but anyway it gave us 43%. I think that exact trade is about to happen again. But 4 stocks in the portfolio will not put in anymore. Zomedica, I think is a buy. Meta, I think, is getting very close to taking out the potential. I would not recommend to buy Meta now. I think oil has potential upside, so if you're looking for anything, I think oil and gold companies could hold up a little in general if I'm correct and markets fall down. The best thing I can advise you until we get back to some new stocks, because you're probably eager and want to get into some new stocks, is go and look for stocks that has low relative strength index, are in the bottom of a possible trend, good support below. This is the main key to take away from this week's podcast. Make sure to have support below, because if I'm anyway close to be correct, we have some major falls. Good support below will make for less slower fall, giving you easier chance to get out. Profits are easily blown away. Until then, you just have to make up your mind. As I told you, if we get into red weeks, I will start to pick up a little bit more shares. That is the end of this week's podcast. Next week I will be back as usual and hopefully find a few stocks next week, which we can get into. Depends how many will be sold this week. Maybe, just maybe, they will stay open. Depends. Everything depends. The answer you will get shortly. In a few hours the markets will open and the trading is on. And while there is trading, there is only one thing I can wish for you, and that is that your portfolio goes into green, that you can bank some profits. This I really wish for you. At the same time, I wish you a very good, nice week, and hope that you will be back in just a week when we will speak next time. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided